this security feeling that by buying government bonds, we have always central banks behind us that will buy at a higher price.
So Roberto, how have central banks been manipulating the market?
In the last few years, central banks have been the main player in financial market. They've been buying, let's say, all kinds of assets, but mainly government bonds. They push interest rates to zero or even to negative territory. And I can give you just an example of how it has been affecting. Italian 10-year treasury bonds were trading 5 years ago at 6.5%, and now they are trading at 1.1%. And the Italian situation didn't really improve. We have a higher debt, we have a banking crisis, so this was just thanks to Super Mario that has been intervening and buying all papers around and creating this wave of central bank quantitative easing.
So in your previous interview, you spoke about central bank policy and a money tsunami. Are you still backing the same idea?
Yes, absolutely. I think that, there are three phases in the tsunami, and in the money tsunami the same. So the first one we've already been living, water has been going away, and in this situation is the same, the liquidity, central banks put all the liquidity in the market, they flooded the market with liquidity, but liquidity disappeared. Where it has been going? It has been going mainly into government debt. So finally, central banks are definitely not independent. They've been buying government debt. And so the liquidity disappeared there, and government has been keep spending and financing their debt at a much lower level. So this is the part one. Part two is, now we are in the part two situation, where finally we see that there is a limit to this policy. The water is being building far away. And so central banks say, no, we see the limits of our policy. We cannot go much beyond, there is no more effect on this. And we need now stimulus from government, and the government should go and make infrastructure spending or take other policies. So we see something that is changing on the horizon. And the third part will come. We don't know. The timing is always difficult to have it precisely. Is when the water will come back. So the money will come back and hit, the market, financial market.
So how has manipulation affected market players?
Market players have been, especially in these last few years, like drug addict, and they get methadone. So we created this security feeling that by buying government bonds, we have always central banks behind us that will buy at a higher price. By pushing, interest rates on a 10 years bond or GGB below zero, can you imagine what does it make as a sense? But of course, if you look at performance of a bond fund, they're great. If you have been investing in any government bond in the last 5 years, you made quite a lot of money. So market players feel relatively safe to be in this kind of assets. But it's a false security. Down the road, these people will have their money wiped out completely.
So what can we do to claw our way back out of this mess, and what assets are a safe bet?
I would say that there are definitely two important things to be done. The first one, you should get a good advisor. It's like when you are in a critical healthy situation, you go to the best doctor. You don't go to the cheapest one or the one that is next to you. So you must have really good investment advisor, because this is the one who could and who can, tell you where to put your wealth, so to prevent your wealth to be wiped out when the tsunami will hit. And the second thing is, of course, don't play by the beach today. Today, if we know that this is going to come, it's better if you start walking up and quickly to the top of the hill, so that you will be safe. Don't stay in assets just because today you feel safe or you feel that there are no volatility in their prices. And so you know, people don't like volatility, so they prefer to stay in cash or to stay in government bonds. And I think you should move away. This is like a time bomb. So, and it's about to explode. So first, advise where to put our money. Definitely not in bonds, and definitely not to let them in cash. So you should move to real assets. So you should move to gold. You should move even to equities. You should definitely be very, very aware of the currency risk. So to be in the right currencies, because currencies where you have huge debt in their country, of course, will be the one that will suffer most, and movement will be huge. I mean, you have seen what happened after Brexit. You know, you could think you were in pound, you were maybe in real estate in London, and in a matter of 4 months, you lose 25% on the currency. If you were a European or US investor, 15% on the assets, so you have 40% that is gone.
Well, thank you, Roberto, for coming in the studio. It's always a pleasure having you here.
It was nice to be here again, Kais. See you soon.
And thank you at home for watching. Don't forget you can catch up on previous interviews by clicking on our YouTube channel. Goodbye for now.